Rohit Kulkarni is Managing Director and Head of Research at market research firm SharesPost, I should say. He joins us from San Francisco this morning. Rohit, it's always good to get you on. Let's start with the stock move today on Pinduoduo. I mean, that was a big debut. Are you surprised, or you say investors are investing in the big potential for the big upside in the e-commerce market in China?
Yeah, absolutely. It was a truly historic day. We should kind of pause and reflect as to when have we seen a 35-month-old company, less than 3 years old, go to public markets in US and have a valuation north of $30 billion. This is truly historic. And clearly, there is a leap of faith that investors took today. They have seen this company grow to a scale which in some shape or form is with number of users is bigger than JD.com. JD has been around for 20 years, and what PDD has done in less than 3 years is truly unprecedented. A bit surprising, but there is a big leap of faith here, and now time will tell whether this leap of faith was truly successful or not.
Rohit, we've already had a very healthy uptick in tech IPOs so far this year. We've covered the likes of Dropbox as well as Spotify. And when you look at the numbers here, at the halfway mark, VC-backed IPOs in the U.S. reaching $6.9 billion, which is more than any other number since 2012. So when you look at the performance today, does that suggest the appetite there is in the market for these tech companies, or is this a China-specific play?
It is both, as in there is you said exactly what I mean to say, as in there is the tech IPO market is booming. There is no better time to go public than what we have seen over the last 6 months. I don't see any particular reason why that changes, given the appetite in growth investors. Also, if you look at what Chinese unicorns are doing, that's particularly interesting, and there may be even more appetite for Chinese unicorns. The reason why I say that is, look at PDD. It was less than 3 years old. If Meituan goes public, it's probably going to be less than 5 years old. DD, probably less than 6 or 7 years old, and so on and so forth. So these are young companies. On the other hand, look at the names of the companies you took: Spotify, Dropbox, DocuSign. All these companies are well into their teens. So you are looking at growth companies less than 5-6 years old in end markets that are massive, with infrastructure that PDD's CEO just talked about: mobile, payments, gaming, social, all the good stuff. So yeah, Chinese unicorns are in a very sweet spot right now.
Is there any risk that this could be a repeat of the dot-com boom? You know, when you look at some of these valuations, you talked about PDD, they've got only 3 years old. They've got a very short history of success so far.
Yes, there is that risk, but I wouldn't go as far to say that we are close to dot-com levels. Again, the biggest difference right now is today there are, 800 million people having mobile phones in China. So there is a pretty long runway for PDD to execute, and they have already seen what execution can do to get market share in e-commerce in China. So again, the valuations are high-flying. There is a leap of faith here, but we are nowhere close to where we are, where we can say, hey, there is dot-com bust looming around the corner. So I still think there's a big, long runway here.
2670 with a 40% price rise after the listing, would you buy PDD at this price?
I would look for a slightly better entry price. But again, if you're a long-term investor with a clear time horizon of more than 12 to 18 months, as in there would be volatility near term, but there is definitely kind of long-term upside. Again, there's a lot of ifs in there, but yeah, there is upside from here on out.
Rohit, you mentioned just how young Pinduoduo is, and some of these other companies that have massive valuations in China, 5 to 6 years old. You compare that to the likes of the big unicorns over in the U.S., Uber, 10 years old, Airbnb, 10 years old as well. You know, the fact that these companies in China are coming to market so early on in their growth story, does that suggest a shift that's happening in the thinking within the tech space, or is this a China-specific story? Because for a while, when you look at companies like Uber, the thinking was if you can raise that much money in the private market, why go public?
Yeah, I think you're spot on. As in, we have seen the age of VC-backed companies when they go public have steadily risen over the last 4, 5, 6 years here in the US. Back in 2010, a typical VC-backed company used to go public when it was 6 years old. Earlier this year, we just did the math, and a typical VC-backed company that went public this year is almost 11 years old. That's not true for Chinese unicorns. I think there are a few kind of structural differences that Chinese unicorns are taking advantage of. One is when they come to US, they are looking at more tech-savvy investors. They are looking at a deeper risk appetite. There is an overseas branding event that they take advantage of. So the earlier they do in their life cycle, I think that risk is very likely to pay off. I just downloaded PDD app on my phone. I can't do anything much with it. But again, hey, they got a customer today.
Yeah, they did get a customer, although you probably have to move to China to get the full potential there, right? Rohit, it's always good to get you on. Rohit Kulkarni joining us from market research firm SharesPost.